As an influencer, you know that your platform is a business and has to be treated as such, which means you're going to have to pay taxes inside of your business. But how many of us are familiar with all of these tax laws and the things that we have to do to get ready to do our taxes? Which is why today we're speaking to professional CPA Christy Bowie, and she's going to be breaking down 10, and actually a little bit of a bonus, of the top tips that you need to make sure your business is aligned and ready to go, so you're taking most of the stress and effort out of dealing with your taxes and finances so that you can do what you actually love to do, run your business, and live your best life. Let's dive in and have a conversation about 11 of the top things you need to know, with a couple of extra bonuses in there.
Hi there, my name is Christy. I'm a CPA and financial consultant for influencers, creators, and business owners. I help business owners as well as influencers help them understand their finances and make sense of their taxes. So today we're going to talk about the 10 tax tips that I have specifically for influencers.
I'm really excited to have you because I have been watching your TikTok and you've been giving out such great recommendations and tips and tricks. So we're going to make sure everybody heads over to your TikTok when we are done. But you have 10 and actually a little bit extra tips for us today that I'm really excited about. So tell me, what is the biggest, most important number one tip you have for us as entrepreneurs getting into the world of influencing?
Yes. So, number one, and this is going to be the overarching theme, is treat yourself as a business. So, everything that I say going forward is going to be the ways that you can treat yourself as a business and how to set yourself up. But, no one else is going to take you seriously if you don't. And the first step of doing that is saying, I am a business and I am a business owner. I receive income for my services and I have expenses. It is absolutely no different than any other business model.
And that's something we talk a lot about on the channel because entrepreneurs or authors or creators, content creators, oftentimes think because it's something more creative, they don't necessarily have to treat it like a business. So we talk a lot about how to do their marketing, how to do their content creation, and how to conduct themselves as a business owner, especially when it comes to something like dealing with your finances and dealing with your taxes, which actually brings us to our second point. What do we need to know?
Yes. So the second point is get an EIN. This basically an EIN is what we call a social security number for your business. And this is extremely important, especially in the influencing space. I talked to an influencer this morning who told me, yeah, I'm sending my W-9 to brands with my social security number on it. And basically what she's doing is every time a brand asks for a W-9, and this is actually part of the next tip, she puts her social security number on it and emails it out to the brand. Number one, emailing your social security number it's just scary. I need you to protect yourself and not do that. And number two, that means that you personally are recognizing the income instead of your business, which for tax purposes, depending on the way you're set up, it may or may not matter. But the EIN will also help brands realize that you are taking this seriously. You are saying, here is my business entity. I am not just taking money from you as an individual. I am a business. And I always tell clients that makes you look more legitimate, which means you can demand higher prices because they're taking you seriously.
And that's an incredibly valuable point because you have that protection of being a business, but it's not just them looking at you like somebody who happens to be on TikTok or happens to be on Instagram creating content and then charging them money for it. So that really does help you to elevate your business and your brand and charge more money, which you
Yes.
then need to be reporting and doing all the things for. So what else do we need to know?
Yep. So the third tip that kind of rolls into what I just talked about is have a W-9 prepared for brands. Basically, this is a form they're going to ask from you anytime they have a deal with you, or they should be if they're not. Anytime they pay you over $600, they are required to report that to the IRS and to you come tax time. So the easiest thing you can do is just have one of these prepared. And as I said earlier, put your EIN on it instead of your social security number. Just fill it out once, have it saved on your computer. That way, every other time they ask for one, you don't have to redo the work. It can be incredibly manual to keep filling these out, but it's the same information. So save it and have that ready to send.
I'm not gonna lie, when I first started doing all of these things, I would manually fill it out every single time, and then I realized it was the exact same thing, and now I have one that's been saved on my computer to make
Yep.
sure that I can just send that out and save myself a lot of time and effort. I don't have to do all that extra work of typing things in, so that's an incredibly important point.
Yeah.
And it brings us to number 4. What do we
All
need to?
right. So number 4 is report all income. So, like I said, when the brand has your W-9, they are going to have the ability to not only send a 1099 to you, a 1099 also gets sent to the IRS, meaning the IRS knows you made that money. So there's no getting around it. Like the IRS knows that you made it, so they know that you should be paying taxes on it. That's a huge red flag on their end when you file your tax return and they can see, hey, they received this from this brand. That's not picked up on their income. So that's a really obvious one. That the IRS can kind of notice. But even if your income is below the threshold where a brand has to issue you a 1099, you are still required to report it. Just because the brand isn't reporting it to the IRS doesn't mean that you don't have to report it. And here's the big one I always get people for. You are required to report if you receive gifts over $100 from a brand. And that is something that, there's not a lot of oversight on this yet. I expect there will be more in the future, but currently you're kind of just expected to keep up with this information. And there are IRS agents on TikTok, YouTube, wherever, seeing you do these unboxings and watching you get this immense amount of gifted products. So that's something I always advise my clients, like, hey, when you are talking about doing a gifted collab, is it something you want enough to pay taxes on it? Because if it's something you would already be buying, okay, fine, you're going to save money because you get it for free. But if it's not something you want, that is income to you that is taxable. So that's something you really, really need to think about when negotiating your contracts. And also another reason to fight for monetary compensation instead of gifted products.
That is really, really important. And we are going to have you back for another episode to really break down what that looks like in terms of those gifted campaigns, how you have to report those, all of those things in our upcoming episode. So make sure you hit that subscribe and notification bell so that you do not miss out on all the valuable information. And that's not the only episode we've got her coming back for. So make sure you stick around for all the fun. And if you happen to have questions on anything we're talking about today, make sure you drop those down below so we can get those answered for you in the comments. Now, something I do want to touch on is those PR boxes that they're sending us. Do we have to then report things that we didn't know were coming? If it wasn't a campaign, if it was something they sent maybe to a PO box, is that something we have to report as well?
Yeah, so unfortunately, any gift over $100 is required to be reported because the thought process is the brand didn't send you that with no expectation in return. They are trying to give you compensation because they want you to advertise for them. I'm not getting any of those because brands know that I am useless to them. Nobody is sending me gifts. So, people try to make the argument. They're like, "Oh, it's a no expectation." And no, it's not. If it were no expectation, people would be sending them to me, but they're sending them to you because they have an expectation that they will get advertising in return. So no matter what, it's considered income. I have been so furious lately hearing about all the people who are like, I didn't even ask for this. And I wish I had an answer. That to me seems incredibly unethical on the brand's part, just to collect your information and send things. I think there will be some legislation on that in the future. But right now, you can send it back, which I know is a huge pain. You can also, I know, there are some ways you can also like not accept it. I don't know if that's, with the post office or however that looks. And then there's another way that you can kind of do what we call advertising, right? So if you have maybe a giveaway for someone and you can't really, there's some rules about you can't gift things away, but if you say, oh, follow me to get a chance to win this huge PR package, you can say that's advertising for yourself, and therefore you can then write off the packages that you received.
Okay.
So there's some strategy behind it.
Yeah, for sure. And with that in mind, if you are going to do something like that, certain states do have rules and regulations on those giveaways where you have to follow very specific steps to legally protect yourself. So make sure you are researching your state's rules and regulations on that. And speaking of understanding things, that brings us to our next point. What else?
Yes, the next one is understand and document any expenses you have. So any expenses that you spend related to the things you are doing to generate income, right? So if I bought a software to get on YouTube, that would be an expense. Exactly. If I bought, a ring light to film content, if I have Canva for making graphics, things like that, that actually reduces your income. So that means you are paying less taxes because you get to offset your income with any ordinary and necessary, is what the IRS says, ordinary and necessary expenses. So the other component of that is making sure you document them. So I think there is some misunderstanding about, I've heard a lot of people say, well, the IRS can't prove that I didn't. Unfortunately, the IRS doesn't have to prove it. The normal statute is it is not deductible until you prove it is. So that is kind of the way that this world works. So you are required, if the IRS comes and asks you, you are required to show the proof. For different expenses, there's different levels of proof required. So definitely be researching that. I put out a lot of content, TikTok, on my webpage, anything like that. I provide a lot of information on that, but just make sure that you are understanding and making sure you know how you're required to document different expenses.
I love that. And one of the things we like to talk about a lot on the channel is the financial side of things and preparing for things that are coming up in your businesses. So tell me a little bit about preparing for taxes.
Yeah. So the next tip, of course, is set aside money for taxes and pay them quarterly. So a lot of people have the thought that paying quarterly is really to make sure that you don't incur penalties. And technically, yes, you will incur like this much in penalties from the IRS if you don't pay quarterly. But actually, the reason it's even better to pay quarterly is to manage the cash flow in your business. So if you owe $20,000 in taxes for a year, how terrifying is it if I go to you in April and I say, can you give me $20,000 to give to the IRS? No, no, you can't come up with $20,000. And if you can, I'm jealous. But it's actually so much easier for me to say, hey, 4 times a year, I need you to come up with $5,000. That sounds a lot more easy to digest and able to manage within your business to say, okay, every few months, we're going to pay $5,000. And so the reason the IRS actually added the penalties for quarterly payments was not necessarily due to wanting to hurt you. They wanted to give you an incentive to manage your cash flow because they were getting to the point where people couldn't pay their taxes at the end of the year. Because it was that situation where we were saying, hey, you owe $20,000. I know you haven't paid in a dollar, but so that's really the big thing. I kind of set my clients up on a system where, hey, X% of all income you receive, let's put it into this separate tax account. And then at tax time, I calculate your quarterly payments and you pay out of that tax account. So mentally, there's a huge mental component of finances. Mentally, that tax account is not for you to touch. It's already gone. And if you owe less taxes, great. You can save for next tax period or you can transfer it back to you personally. But I never want my clients to be, dipping significantly into their personal accounts to be paying taxes. It should be set aside periodically and paid in periodically so you never have an emergency.
That's incredibly important to make sure that you are managing all of this and overseeing everything that goes into this because we don't want to come up against that roadblock of owing a ton of money all in one sitting. So I love the idea of breaking it up and making it a little bit easier and managing that in a way that's going to be a little more acceptable and not panic inducing as the other way would be.
Exactly.
Now, we do want to keep the conversation going. If you are joining us for today's episode and you have questions, go ahead and drop those down below. We want to make sure we're getting those answered for you so that you can move forward in your influencing or content creator life so that we're making sure that your business is protected, especially when it comes to these taxes. And we are on number 7 of our top 10 tips with a little extra coming your way as well. So what do we have for 7?
Perfect. So number 7 is keep track of all the tax forms you receive. So very particularly, kind of how I alluded to earlier, you're going to receive 1099s. You will receive more that, the ordinary person does, but specifically your 1099s. Kind of how I shared earlier, when you receive a 1099, the IRS also receives a matching 1099. And so you need to make sure that when you receive those from brand, as you are doing your tax return or as your professional is doing your tax return, they can say, okay, we picked that up in income. Okay, they sent me a 1099. We've recorded it. We're good. If you don't keep up with those forms, then you're just not going to know. Or if you don't have good books, or if you have someone like me who's your CPA or tax professional and you don't provide me with those forms, I have no way of knowing. I unfortunately don't know every single thing about everybody's life, as much as I wish I did. But when you receive those forms, you're going to start receiving them in January of the following year. So I have this like file folder system. And literally, it's just kind of like a folder. It sits on my shelf. And every single January, I put a new label on it and I say, okay, 2022 taxes. And every single time I receive a piece of mail between January and March, and I know I'm not going to do my taxes before then. So I take that piece of mail and I put it in that folder. And then when it's time for me to file my taxes, I know where all that information is.
I love that. And it's really one of those important things to make sure that we do keep everything collected in one specific area, because it's so hard to come down to the wire and then try to find all of these forms. Now, I know that some companies are a little slow at getting paperwork to us. So, do you have advice on handling that when we're not getting things sent to us on time?
So, really, your 1099, if you are recording your income correctly, the 1099 doesn't matter. All it is a resource to say, like, I should be able to look at your financial statement, say, okay, the brand sent you this 1099. Let's look where in your income you recorded it. And if you hadn't recorded it in your income, that's when I'm going to say, hey, this needed to be added to your income. But really, it's kind of just a double check. It shouldn't be how you record your income. And then another resource I have is you can go to the IRS website and pull what is called a transcript. So if you are saying, oh, maybe I moved, maybe they didn't send things to the right place. I mean, I move apartments every year and I'm always terrified that things aren't going to come to me. And I think that's a pretty universal issue. And so you can go to the IRS website, just look up, get my transcript, and you can pull what's called a transcript. What that means is any information that was reported with your social security number, you can pull that and you can see what has been reported to the IRS just to make sure that you are counting all of this information.
That is fantastic. And I also didn't realize you could do that. So,
Yes.
that's a really good piece of information for me to know. I love it. We're getting all sorts of really valuable tips from you today. And I really like the next one. I feel like not a lot of people are aware of some specific ranges that we should know when it comes to our income. So, what do we have for number 8?
Yes. So when your income is above $70,000, you should be speaking with a tax professional. This is because there are ways, and you've probably heard of the infamous S corporation or SCorp. There are ways that we can significantly reduce your tax liability based on the ways we structure your entity. And those are things that get a little bit more confusing. I mean, I have been doing this for 6 years and went to school for a bachelor's and a master's degree and a license to do this. So there's a lot of education and training behind it that makes it worth hiring a professional to figure out these numbers for you. So I talked to a client this morning who I was saving over $15,000 in taxes simply by changing her entity structure when she was hitting, above this income limit. So at the very least, you should book, a one-time call with a professional and say, hey, does the S Corp make sense for me? And if not, that's fine. You can keep operating, but that's just a threshold that you should be aware of, that you could have very significant tax savings there.
And as somebody who is working in business, one of the things I always encourage my students to do is to be frequently talking to professionals that you need to build up your business. We are going to chat a little bit about that in a bit, but one of the things you need to be doing is staying in touch with somebody who is helping you with your money, especially because most of us aren't trained in this. So even if you don't hit that really high threshold of income, be in touch with these people anyway, because it's going to help to keep your business safe and structured properly. Now, another thing that I love discussing, and I really love number 9, is that we get a lot of really good information from YouTube videos and from Instagrams and TikToks and from people who are online. So talk to me a little bit about social media and tax conversations.
Yes. So I say question everything on social media, and myself is not excluded. If you see me post a video, be like, hey, Christy, what are the nuances behind this? Reason being, if I post a 60-second TikTok video, I cannot explain to you everything I have learned in my 10 years of being educated and being in this field in 60 seconds. I just can't. Also, we all know the way to get people's attention on TikToks is hooks. It's saying something dramatic, it's saying something controversial. So if you think about it, the whole point of these things people are saying is to grab your attention. It's not necessarily to educate you on all of the nuances of the specific thing. Also, being a tax professional but not knowing every single individual person's situation who is watching my TikTok, I can't advise on your situation. So, there are things that people say out there, not intentionally to be misleading, just, we cannot cover every situation in 60 seconds. It's just not possible. And I even did a whole TikTok series kind of like calling out people. But, I understand. Like, I'm never going to say, like, you said this wrong unless they like blatantly did. But there's just only so much information you can convey over social media.
Absolutely. And we always want to make sure if we are getting information on our business from anybody on the internet, make sure that they are a credible source and then make sure you're asking questions. And in a situation like this or dealing with legal things, you always want to make sure that you are consulting your own professionals as well, because, like Christy said, we do not know your individual situations, but your particular person will be able to understand that and give you the best advice possible. Which brings us to number 10, and then a little something extra for all of you. So, what do we have for number 10?
So, number 10 is keep up with the deadlines. So, the biggest deadlines in the tax world are, of course, your personal income tax return, which is April 15th, or when that falls on a holiday, the next business day. And then also, if you have a business return, that's actually going to be March 15th. Same thing. If it falls on a weekend or holiday, it's the next business day. And you can also extend each of these returns for 6 months. So, my big deadlines in my business are March 15th, April 15th, and then for anyone who's extended, September 15th and October 15th. So those are the biggest deadlines, but then also quarterly taxes. Those are going to be April, June, September, and then following January. So that's also all on the 15th or the next business day. So just be aware of these numbers so that you can say, oh, hey, September 15th is coming up soon. Maybe I should check with my CPA, or maybe I should, if I don't have a CPA, maybe all this money I set aside, I should be sending it to the IRS to make sure that I've got my quarterly payment done. So just making sure you have those on your calendar, or, you are subscribed to someone's email. I do this, who reminds you of all of these payments coming up.
And just keep in mind that if you are working with a professional, you cannot wait until the deadline to send them information. You have to make sure you're giving them enough time. So, what is a fairly good idea to be sending it in advance so that someone like you has enough time to handle all the paperwork?
Yeah. So in general, for quarterly payments, I have a program called the membership, which is basically where my clients just get this information from me. They get quarterly payments. So around the first of the month, or the first business day of the month, I will send out a request for information that says, hey, can I have all this information, such as your most recent financial statements, what quarterly payments you've made, all of that. I send that around the first of the month. The reason I do this is because, if at all possible, I would like them to close out the previous month. So if I'm working on September 15th payment, I would love for you to close out August and then send me those financials. I totally understand if it's not doable, but generally I work on month-end books. So if you don't close August, you need to send me July, which puts us a month back, and it's not detrimental. But that's why I send requests on the 1st, and at the very, very latest, I need it by the 10th. This is because I have lots of clients who I have to calculate, who are all going to wait to the last minute. And, I think it's kind of hard for people to understand sometimes, like, I don't have arbitrary deadlines. Like, if I'm late, I can't change the deadline. It's not for a project. It's not for something I want to put out. It is literally a government imposed deadline. So I generally request information at the very latest between the 1st and the 10th of the month that we have a payment due.
That makes a lot of sense. So if you are working with a CPA, make sure that you're getting the paperwork in a timely fashion so that you are not late turning in your report and
Exactly.
your money and all the things.
And also be thinking about it before it's time, because I personally closed down my tax return intake in October, November, December. Like, I am not next April. If you come to me, sorry, I'm booked out. Just like any other service professional, tax accountants need to know what their schedule is going to look like. And because we have an incredibly limited window to fill out all of these tax returns, unless we extend them, it's whatever I can do between January and April is what I can do. And so, there are people who will just be able to be having to shut down their intake. And also, they can't provide you the level of service you probably want if you're reaching out during the busiest time of the year.
And we go back to our conversation earlier about managing that paperwork. So if you are taking care of this as you go, it's a lot easier to then be able to send all of that to the professionals that you're going to be working with. So nobody's getting overwhelmed and the work is getting done in a timely fashion, which brings us to our final bonus point today. What do we
Yes. So this
say?
is kind of a compilation of everything we've talked about, but have a good team. Have people who you can trust are going to put your best interest at heart. Because I can guarantee you, probably 90% of you are saying, Christy, even if you explain this to me 15 times, I'm not going to know how to do it. That's fine. I don't expect you to. What I need you to do is have faith in a professional that they are looking out for your best interests. And if you can do that, and if you have someone you can turn to when something happens, that is how you know you are taken care of. And I say this about every professional you work with. I had a phone call with a lawyer 2 days ago. I didn't need a lawyer. I interviewed him and I said, hey, I don't need anything from you right now, but I want to know that when I do, you are there. Because if and when something happens, whether it's something legal, whether it's something financial, you do not want to waste precious time looking for someone to reach out to, then getting to know them, then having them address your issue. You want someone who already knows you and who is already on your team and who is going to look out for you. So whether this be an agent, a lawyer, a CPA, I've even heard someone say a doctor is included in this. When you get sick, you need to have a doctor ready to go. So you need to build a really good team around you to help support everything we've just listed. It's really overwhelming when you look at it as a whole, and it's easy to say, I can't handle all of this. And that's why you need to build a good team around you.
And knowing that that is something that you do need to do, you can break that into pieces and into steps so that it's not as overwhelming. Create your team, but do it step by step so that it's not all at once. Just like getting our taxes ready is not going to be done all at once. If you do it in those little steps, you're going to be ready to go without that overwhelm. This has been incredibly informative. Where can people reach you online for more questions or to work with you?
Yeah, so my website is christybowie.com. It's just my name. And on my website, I have a bunch of resources from freebies to service offerings, all of that. So you can see both my freebies, my services, and something else I have called the membership, which is basically a way that you can make sure your taxes are taken care of and that you always have someone on your side, and you have an educational community as well. So all of that is listed on my website. I am also on TikTok and Instagram at It's Christy Bowie.
Hit that subscribe and notification bell because Christy's coming back for 2 more episodes breaking down taxes on gifted products and write-offs for influencers that you do not want to miss. We're going to go even more in-depth than we did in today's episode. And we're going to be making sure that we are answering your influencer questions as we help you build up your brand to create more profit with less work and effort and stress so you can move back to what you love doing, running your business and living your best life. Daily videos are dropped here on the channel to help you level up on your socials and within your business to create more profit without the extra time, effort, and stress. I'll see you in the next episode.